Hey guys, welcome back. In this episode, I'm going to be talking about BarkBox. Now, BarkBox is a monthly subscription service that sends out different dog products, services, and experiences. Now, they serve over 1 million dogs monthly through their BarkBox and their Super Chewy subscription. Now, I originally wasn't going to do an episode on this because I typically like looking at really disruptive companies that have a huge total addressable market. However, when I looked into this company a little bit more, it's definitely a little compelling. Now, I originally looked into this company myself because I'm a dog owner myself. I have a 5-year-old black lab named Kona, so I feel like I can definitely put myself in the shoes of a customer as I'm definitely one of their targets. Now, the exciting thing about this industry is that pets remain in high demand during COVID, as there's been about 11 million new US American households that decided to get a pet. Now, another reason why I want to look into this company just a little bit more is because I was originally looking at Stitch Fix about a year ago when the company was only trading around $15 to $20. Now, Stitch Fix has the same exact business model, however, they deal with clothes. I decided not to invest in it because I really didn't understand how big their audience or their total addressable market was. However, Stitch Fix has done really well in the past year and is now trading around $80. Now, can BarkBox see the same growth and rise in share price? Maybe. Let's go ahead and talk about it. So let's first talk about who they are and who they serve. Now, their mission is to make all dogs happy, and they're committed to creating the world's best products and experiences to satisfy each individual's dog's distinct personality and preferences. So quickly going over their investment highlights, they're a big, relatable, and growing pet category. They're a digitally led dog-to-consumer brand. They have a personalized, data-driven subscription experience with strong retention. They have clear levers for accelerating growth. They have strong incremental margins and a powerful operating leverage, and they have a visionary and passionate team to help scale their business. So as we talked about earlier, they're currently serving over 1 million happy dog subscriptions every month. And with over 1 million subscriptions every month, that translates to a pretty good financial performance. They did $369 million in net revenue for the fiscal 2021, with a 65% net revenue growth and 60% gross margins. Now, BarkBox has been in the game for a pretty long time, all the way from 2014. And we can see from then, every single year, they've grown pretty healthily with their active subscriptions. As we saw in 2020, they were doing around 663,000 active subscriptions. However, in 2021, they did about 1,050,000. They also have 6.5 million Bark customers and an impressive 8.5 million social media followers. So we know that Bark has a subscription model. However, they have different products in their lineup. So they have BarkBox and Bark Super Chewer, which is for toys and treats and durable toys. However, they just released Bark Home, Bark Bright, and Bark Eats. This includes anything from all essentials, dental solutions and health and wellness, and healthy food blends and service. What's also standout is that they're saying that they have personalization for each box, as with every dog, they tailor many of their products to their unique needs. And with any online or subscription business, they have a lot of data, and their data-centric model helps fuel product innovation. Being able to collect all this information from all these different dogs and customers allows them to lead to monthly customized assortments, which in turn helps boost customer satisfaction. So of course, we love to see a good NPS score. NPS stands for Net Promoter Score, and that essentially just shows how happy a customer is on a scale from 0 to 100. Now, they have a very impressive brand. They have a lot of social media followers with 8.5 million. They have 170 million unique Bark Post visitors, and 23,000 retail outlets carry their products. What this translates to is effective and efficient cross-selling. So it allows them to be able to upsell their customers through all their different products. So what does this mean? It means that they're good at cross-promoting new products to active subscriptions through Add to Box. Add to Box is essentially their growth driver, which helps them drive higher margins driven by machine learning and fueled by innovative product offerings. And what this has done is drastically help improve their subscription revenue. So now that we know what BarkBox is all about, and they have pretty strong financials, let's talk about the elephant in the room, and it's really their growth opportunity. Now, BarkBox is saying that they have an opportunity to accelerate growth, rapidly expand TAM through new product lines, and do so in a proven and fiscally responsible way. They want to grow their subscription business, which is their cash cow, expand new product categories with the ability to cross-sell, They want to distribute through other big channels, such as Amazon, and expand through retail distribution, such as Target, Costco, and Petco. Now, one big growth driver for them is their new Bark Eats product. Now, there's a much bigger total addressable market because every single dog does need to eat food. And they believe that having a healthy and good tasting product would translate to a lot of growth in sales for them. Now, the great thing to see about Bark is that they have distribution channels that provide leverage to seamlessly introduce new products. They already have a lot of collaboration with a bunch of different retail partners, as we see that in 2018, they landed a whole bunch of different partnerships with Target, Amazon, Subaru, and more. However, in 2020 and beyond, they're landing much more from partners anywhere from PetSmart, Petco, Costco, and really the list goes on. So I believe the opportunity is really strong for them as they already have their brand reputation and appeal for their products. So it'll be a lot more easy for them to get into other retailers. Lastly, as we all know, Amazon is the king of e-commerce and they've already done a really good job of expanding there. They've seen about 2.5 times Amazon sales growth year over year. Now we can get to the fun part, the financials. Now they've seen 2 times new subscription growth year over year in fiscal year 21 to date. So they're seeing very strong growth with a record high 94% monthly product retention in the most recent period. Their gross margins are pretty healthy, around 61%. And the really good thing is that they have positive adjusted EBITDA fiscal year to date. Now I think this is really interesting because I really wanted to see how well and how healthy their business is. Now, they're saying that the gross profit per subscription through 8 months is up year over year. And in 2021, that number stands at $108. The good thing, though, is that the customer acquisition costs are going down from $56 in 2020 to $42 in 2021. Okay, so now let's talk about the juicy part. In 2018 to 2020, they did about 23% compound annual growth rate. Now, from 2020 to 2023, they're projecting that to be about 47%. So they're projecting a huge increase in the demand for the products. Now, the gross profit is also pretty healthy as well and is also increasing. However, the core adjusted EBITDA is still negative and they don't plan on being profitable until next year. Now, looking deeper into their P&L, there's a couple things that stand out to me. From 2019 to 2020, their revenue growth was only about 17%. However, from 2020 to 2021, that number is at 64%. So the pandemic has had a huge impact positively for the business. Now, because BarkBox isn't strictly a software business and they actually sell products, their gross margins are actually going to go down over the next couple years. And the last thing is that net income, even in 2023, they don't even plan on being profitable. So where does this match up against some competitors? Well, they compare themselves to Chewy, Freshpet, and Trupanion. And they're saying that the growth rate from 2020 to 2022 is 41%, which is higher than the rest of their competitors. They're also saying that the price of sales for 2021 and 2022 are also drastically lower than the rest. Now, they're saying that their adjusted EBITDA, they don't plan on being profitable even in 2023. However, for core adjusted EBITDA, which represents BarkBox and Super Chewer, they believe that they'll actually be adjusted EBITDA profitable by 2021. So on a valuation basis, it looks pretty attractive, but we also need to take account of what we talked about earlier with all their financials. So there you have it, guys. That was my breakdown of BarkBox. Now, I really like this company because they're working in a very niche industry and they seem like they have the first mover advantage within this whole entire monthly subscription service. Now, the big question to me is, how big is this market? Are they going to see a lot of growth and demand over the next 5 to 10 years? I already know BarkBox will have a big share of this market, but it's really the question of how big of a market can it be? As we've seen with other monthly subscription services like Stitch Fix, they've done really well for themselves. And I think this could actually be a pretty good opportunity. Now, if you guys own a pet yourself, especially a dog, I'm sure you can relate with how much you love them and how much you treat them like a family. I know people in my life that personally spend hundreds of dollars on treats, pampering, and a whole bunch of other things for their dog. So I believe people are really willing to pay a lot for their pet. I do think BarkBox is a pretty compelling investment as they're a play on the online pet service. And as we've seen with other companies in the space, such as Chewy, they've seen insane demand and growth. Now, BarkBox's business model is a lot more similar to Stitch Fix. However, when we've seen with Stitch Fix, they've seen a lot of growth and demand, and there's definitely a market and audience for them. In my opinion, I think people would be more willing to pay for their dog for some treats and some other toys as opposed to just getting some clothes for themselves. So I think BarkBox is actually much more of a compelling investment than Stitch Fix. So what am I going to do? Well, I personally really like this company. I like the space that they're in, and I think they have a lot of growth ahead of them. The reason I'm not investing is because I really don't know how big of an audience or this market is, so it's a little hard for me to judge on how big this opportunity is for them and how much growth could be available. So for those reasons, I'm deciding to hold off for a little bit. However, I do need to do a little bit more due diligence to see if it's a good investment. So with that, guys, thanks as always for sticking around. Let me know in the comment section down below what you guys think about this company, as well as what you plan on doing with this stock. With that, guys, I'll see you in the next video, and let's go get that bag.